Hello, Mavic Currency Traders. This is Sonkit here, and I'll be breaking down this preview for the upcoming US employment report that's due tomorrow at 8:30 a.m. Eastern Standard Time. As always, what we want to do in this session is sort of plan out what we're going to do for tomorrow. Where do things look, and where's the best opportunity? So let's just start with what's expected tomorrow. So we have the US and we have the Canadian jobs report at the same time. And you can see that right now, they're expecting not a whole lot of change out of the U.S. Unemployment rate. They're expecting 169,000 jobs to be created. And then if you take a look at Canada, we're looking at 6.8, so a little uptick in the unemployment rate. And then they're looking at 25,000 in the employment change. So you can see that nothing spectacular that we are expecting here as far as the job report goes. So, again, we will see what kind of price action we get. But the biggest move happens when the numbers come out way off from expectations. So let's just say any numbers comes out way above or below. Guess what? That's where they're going to have the biggest move. But if it comes down in line with expectation, I expect markets to not care too much about the employment numbers and then kind of go in with whatever the relative strength and weakness is telling us. So let's just do our quick currency basket analysis and then take a look at where things are. So let's just start with the broader markets. It's important to kind of look at which kind of sentiment that we're in, and then we'll take a look at relative strength and weakness in currencies. Now, this is the daily chart that we have in the S&P 500. You can see that this thing is not overly bullish. It's not bearish. It's mildly bullish, I would say. But we have that big resistance in place, and you can see that it's just been a lot of back and forth within this currency or within this equity market. So the risk trends are not so optimistic, not so bearish. So that's really where we are. Now let's just take a look at see where we are in the currency market. So we had a big sort of a move over the weekend, and then things kind of simmer down. And the question that we have here is that, is the dollar turning? Because tomorrow we're looking at dollar pairs, since for the U.S. employment report. So for the dollar pairs, the big question is the dollar still bullish? Is the dollar turning lower? Where's the dollar going? And I think it's very important to take a look at where the dollar is right now. And you can see that we had a massive wick on this candle here, and we got a little double top here, and then here we are, kind of making a bit of a breaking the support. So if we just zoom in this area, you can see that we are below the 20, and we actually now below 50 as well. One of the things that we see around these key levels is that we see a bounce. Well, in this case, you can see that we did go through lower. We did have a bounce today, but then you can see that it kind of gave up towards the most part of the day. If I go on a 4-hour chart, and you'll see that we are sort of selling on the rallies here. So we got this little rally here. We sold, we got the little consolidation, we broke down, and we got a little bit of rally here. So clearly the dollar looks under pressure. So let's see if we can get some confirmation from other areas. So first thing I always take a look at is bond markets. Is the bond markets doing the same thing? So here we are with the bond markets. This is the daily chart. And of course, we're seeing the similar scenario where, we were right at the support area. We were in this still tight consolidation, and then we did break lower. So we definitely are getting the signals here that's pointing out for maybe dollar more further bearish. Now, last thing, let's take a look at what the yen is doing, because we always want to take a look at dollar yen. It's a good indication to know where the currency is going. And voila, right there, you can see that the dollar yen is now under pressure too. It did break lower, and it's on a 3-day run to the downside. And you can see that these are key levels. We were stuck in between that 156 to 155, 154. And now here we are sitting at about the 151 area. So at this point, this is the level of support. But what we're trying to identify here is that, okay, well, the dollar is looking weak. So the bond market is telling us a weak dollar. The dollar basket is at those critical levels. And then we also have the bond yields kind of moving at the same time. Now, the big question is that, if the risk trends gets a little bit worse, like let's just say if the market does pull back, is that going to help the dollar go higher? And if that's the case, if the dollar is going to go higher, then we might get a dollar sort of reversing off the support area. So that's why I said we are at this critical level. We are below the 20 to 50 moving average. But we have this key support area right over here where it can either break down lower and make it, a big sort of a breakdown, or it sort of rise from here and then we are continue to be range bound. So I think it could go either way as we go into tomorrow, depending on what the number is, depending on how the market reacts to it, depending on what the risk sentiment is. There is going to be that big, that move. But let's just say that, is the dollar acting as a safe haven currency, or is it the yen? And you can see that yen looks interesting here. We have periods in yen where it does rise and it gets noticeable. I mean, we had these periods here last year a couple of times back in September and then back in December. And here we are making that another run again. So this is, again, it's just telling me that these are the two currencies that are moving right now. Let's just see if any other currencies are moving. Here's the dollar, the Swiss franc. Oh, this thing is still range bound, so it's not really moving. The euro is range bound. The British pound, they just had a rate cut, and we just have a bit of a fall here. So this looks a little bit bearish. We have the Canadian dollar. Well, that's not really going higher. That's still under pressure. We have the Aussie staying sideways, and then we have the Kiwi. And Kiwi is kind of staying sideways too. So as you can see, when you look at all these charts, that we are not really seeing a big shift where the dollar pulls back and everything else against it goes higher. We're not really seeing that. We're only seeing that move in the dollar and the yen. So I think that as we go into tomorrow, we just have to be very careful, with the outlook, if it's going to break lower or it's going to break higher. And we want to see those things on the currency basket levels. So when we take a look at all the dollar pairs, they all kind of at this critical support level. I mean, that's our dollar CAD. Dollar CAD is right at the 50-day moving average. Here we are with the Aussie dollar. It's right at the moving average there. So, these are longer term trends, the 50-day moving average that we tested this level right here. And here we are retesting that level here again. So again, looks interesting where it could accelerate. This is a reversal, and then again, doesn't matter which currency that you pick, they're all going to have a big move. Dollar yen is already kind of in that free fall. Let's take a look at things like euro dollar. You can see this thing is right at the 50-day moving average as well. And here we are. Let's just see the pound USD. It's right at the 50 moving average as well. So you can see that the dollar is really at the crossroad here, and it can either break out tomorrow. It's going to be one of the other things. Either it's going to be breaking out, or we could fall right back in the range. And if it does break out, remember, we have been in this. Let me go back to the dollar currency basket. We are in this. Anyway, what is it? We started this run back in October, and here we are all the way in February. Though this move is running for almost 5 months. So, question is that trend turning lower? Is that trend changing? And I think we will get an answer tomorrow as we get that clarity on how we close, tomorrow. And based on that, I think we'll have a great idea going into the following week on how we're going to respond. So that's really where the sentiment is. That's where we really want to be. So this is where the velocity score is. As you can see, the yen is the one that we're going to watch for, is the +3. Dollar is kind of right in the middle here today. But again, dollar is consolidating. Remember, dollar had a big move. It's just consolidating and figuring out which way it's going to move next. And outside of that, I think it doesn't really matter what you pair with. But dollar yen probably the best pairing. But if the dollar does break lower, we're probably going to see that dollar CAD breaks lower. We're going to see Aussie dollar break higher, or the Kiwi dollar breaks higher. We're going to probably see, a bigger move on those daily charts. But as always, we talk about strategy. What's the best play of playing this news, especially as we are at these levels where it could, anything can happen. We can trade before the news, enter on the news on second stage. So the fact that we are right at the support, it kind of makes it a 50-50. It's like a coin toss. It can really break lower, or it can just reverse higher. It just go either way. So I don't really love entering before the news. So either I'll enter on the news where, we look for the initial price action, wait for the highs and the lows to establish, and then we just see a second stage entry where we see a further continuation of that run. Or we just go for a second stage entry where let that thing play out, let the consolidation, let the noise settles, and then see which way it breaks. And we might not get that second stage entry tomorrow. Maybe we'll get that on Monday, the following week. But again, since, the Friday, we're going to get a lot of action in the morning and things kind of dies down after that. So, these are the three strategies here. And as a trader, you should always be able to, look at the pros and cons and see where we are at and see what you feel more comfortable with. Now, every strategy has their own pros and cons. One of the worst one is the slippages that happen, especially if you put your stops before the news. A lot of times I get the question, hey, can I just not put a trade for both sides and see whichever one get fills? The problem is that, you can get whipsaws, and we'll talk about that whipsaw after that. But the first thing is slippages, where, the stop is not a guarantee that it's going to fill you at that price. So the best thing you can do around these news events, if you are trying to trade that, do a stop limit order. So a stop limit order creates a window and say, hey, if the price stays between this 20 pip range, I'm okay if you get me in. If it jumps too much, I don't want to get in. So that's where, the stop limit order kind of creates that window here. But yeah, slippages got to be careful about, especially even if you have a stops in place. If there's a big move happen and there's a little gap, it's going to only fill you at that gap price. Now, whipsaw is the other one where, like that idea that I just said, you say, hey, let's put a buy order, let's do a short order and see which one gets filled first. The only problem with that is that whipsaw. And sometimes you see that often where, you get a big candlestick on one side and you get a big candlestick on the other side. And then the price kind of just settles right back in the middle. Now, that's just the worst, price action to have because, you get filled on both sides and price doesn't go anywhere. And that's one of the drawback of these, putting in two orders at the same time. So going to tomorrow, like I said, use your strategy. Think about how long you want to hold that trade for. I don't mind taking a look at where things are going to go tomorrow, and then we'll have a great outlook going to the following week, because then we'll have a confirmation on the daily chart if it's breaking out above that 50 moving average or it's going to stay below that. So those are the game plan here. And as far as the preview goes here, again, take a look at stop limit orders. Like I said, use a stop limit order on if you're trading on the news or before the news. Dollars at a critical level. And that's where we need to take a look at it from both case scenario. What if the dollar goes up and what if the dollar goes down? Now, looking at everything we just looked at, dollar does look like it's under pressure. So unless something in the news comes out and it just totally turns things around, I won't be surprised, the dollar sort of, stays weak. That's what the chart's telling us right now. Now, for a weak dollar scenario, dollar yen short probably looks the best. I mean, as we look at all the charts, dollar yen probably looks the best. And again, taking a look at all the other dollar crosses like the Aussie dollar, Kiwi dollar, even though I don't in love with the Aussie currency basket or Kiwi currency basket, just realize that you're playing the dollar here. So whatever you're getting, that big move, that's a dollar move. For a strong dollar case scenario, now in that case, I think we'll probably look for some reversals. And same thing, it kind of looks at everything else. We'll probably see the prices reverse. If we fail to break out of those the 50 moving average. So I think that's really where we are. As you choose accordingly. Like I said, everybody trades differently, and we're just going to take a look at it from a both case scenario. As a trader, you should be able to not trade your bias, but take a look at things from both case scenario and be prepared for both case scenario. What if the dollar is strong? What if the dollar is really weak? And then act accordingly. Well, thanks for joining here. Until then, tomorrow, we're going to keep the powder dry. Don't really look into enter any trades. I think there's going to be some good moves tomorrow, depending on what the number comes out. And then we'll go from there. Thanks, anyone, for joining. See you next one. Happy trading.